Hello there. Welcome back to Elements in Focus. Today we're going to be touching on using HSAs for tax efficiency. Probably one of my favorite vehicles that has been unleashed on the general public since the Roth 401k and IRA came into fruition. And none other, and actually so excited to be having to talk about the subject for us, is none other than our Director of Financial Planning, longtime friend, and the GOAT, as kids say these days, Rheaume. Today we'll be covering the tax part of our critical elements and really diving deep into the HSA and how to use it for tax efficiency. Aaron may go through some strategies even, but really one thing I'm going to call out is the article he's going to write that kind of coincides and couples with these Elements in Focus videos where he goes in a lot more detail. He's a very, very good writer. And I really, really want to point people to some of those articles that we are writing as a team, because we go in a lot more depth sometimes in strategy as well. But enough of me, Mr. Rheaume. When we talk with families, this is one of the most powerful vehicles they can have access to, and it's one of the most misunderstood. So when using HSAs for tax efficiency, what are we talking about?
Great question, Grant, and thank you so much for the awesome intro as always. It's nice to be called the GOAT, but I will humbly not accept that compliment. So HSA, that stands for Health Savings Account. And it allows you, if you have a high deductible health insurance plan, it's a vehicle to where you can actually save in a triple tax favored way. What do I mean by triple? Well, triple means that you can save tax deferred, so it can reduce your income. If you invest it, the account that you invested in can grow tax free. And as long as you use it in the future for medical related expenses, your distributions are tax free as well. That is much better than a Roth IRA. So the Roth IRA, you pay taxes today, money goes in it, grows free, tax free, and then the distribution is also tax free as long as you're 59 and a half and some other stipulations. I'm not going to go into the details of the Roth, but the HSA, triple taxation, recap, you can have the money deducted off your tax return. As a single filer, this year I got to look at my tax sheet. You can put into the HSA $4,300 in 2025, and as a family, you can contribute $8,550, so $8,550. If you are over age 50, you can do a catch-up contribution of an extra $1,000. So as a family, you can save almost $9,000 into that HSA account, and your income would be reduced by $9,000 on your tax return. The other benefit to an HSA is it's not a use it or lose it type of thing like an FSA. A flexible spending account you have to have emptied by the end of the year. Your HSA you can let grow. A lot of times, if we have people that have enough cash reserves to where they can pay medical expenses out of pocket, we have them pay it out of pocket so it lets that HSA grow for the future. So if you're younger, let's say you're in your 20s, 30s, 40s, maybe 50s, I'm not going to define young, but you could potentially start using that account to build up a nest egg for future medical expenses. Sometimes, and what I'm specifically doing, and some of the other advisors here, we are not using our HSAs so that we can let those grow for the next 20, 30 years and have a pile of dollars built up for long-term care in the future. So there's several things you can do with HSAs. They're also ideal for high-income earners. It can transfer to a spouse tax-free if something happened upon passing. And then after age 65, if you don't want to use it for medical expenses, you can still take distributions out of the account, but at that point, they would be taxed at ordinary income. So a lot of good benefits and vehicles to that HSA. Grant, anything else that you want me to cover or talk about? I was trying to be as brief as possible with this vehicle.
No, I appreciate that, Aaron. I think being succinct and simple is really kind of the best way to address this. I mean, it's a very powerful account, folks. Don't misunderstand what Aaron just said, please. It is the trifecta of tax benefits. And so one thing that we ran into recently, just to put this out in the universe, is that if you working for a smaller employer and they do have a high deductible health plan, but they do not give you access to a health savings account or HSA, that does not mean you do not have access to an HSA. That means that you just have to go out and find a custodian like Schwab or Fidelity to house that for you. The only stipulation in the law is that you have to have a high deductible healthcare plan. So if you have a high deductible healthcare plan, the organization doesn't offer you an HSA, you can go to Fidelity, you can go to Schwab, you can go to other custodians and say, hey, listen, here's the proof. Let me set up an HSA. And you can fund that, have your payroll company fund that on your behalf with that custodian. And so just don't think you don't have access to it. So again, it's like, oh, Grant, Aaron, I have this high deductible plan, but I don't have an HSA. Well, you do. You just need to go get it on your own. And if those are things that you're looking to try and accomplish, please don't hesitate to reach out to us. You can call us at 800-928-4001. We have a very well-disciplined, intelligent advisory team that would love to connect with you and walk you through some of the elements that we talk about. And if you have a simple question, hit us up at talktofeg@yourlifeafterwork.com. We'd love to engage. And more importantly, if you're looking to engage in a Next Steps complimentary meeting, please give us a call, 800-928-4001, or shoot us a message at yourlifeafterwork.com or the QR code. We'd love to connect, make sure you're on the right path, and make sure your critical elements are being covered. Aaron, appreciate your wisdom as always, my friend. For those of you that are looking for communication with a fiduciary advisor, we're here for you. Give us a jingle, and if not, we'll see you at the next one, my friends. Have a blessed day.